So when some of you think of finance, you might think of either commercial banking, which is your typical local bank where you have a checkings or a savings account, or you might think of a CFO of a big corporation, your chief financial officer. That's called corporate finance. However, that's only part of the equation, and today I'm going to discuss careers that you can have which are on the investment side of finance. So to get started, I'm Tristan Pena. I'm a senior analyst at Bridgewater Associates. I've been working there for about 5 years. Bridgewater Associates is one of the largest hedge funds in the world. We have about $140 billion under asset management. Previously, before Bridgewater, I was working at Lazard, which is an elite boutique investment bank. And there, primarily, we focused on mergers and acquisitions, which is basically a type of debt offering where we have two companies and we either merge them into one, which is a merger, or we have one company acquiring another company through financial leverage, and that's called an acquisition. I'm also part of 3 financial associations. The first one being the ABA, the American Bankers Association. Second one's the AFA, the American Finance Association. And the third one is the Association for Financial Professionals. So let's discuss 3 careers that you're going to be able to have on the finance or the investment side of finance. The first one being an investment bank, which is what I used to work at. Second one is a hedge fund, which is what I currently work at. And then the third one is going to be private equity firms. So let's start with the differences between each of the 3. The first one, an investment bank, is as some of you have learned in your economy class, is a financial intermediary. What investment bankers do is they are primarily underwriting and they're raising capital. Now, if you want to raise capital, you can do this through 2 ways. It can be either through equity or through debt. If you're doing equity, you can do an IPO, which is an initial public offering. You can also do it through stocks. You can do it through futures, through options, through swaps. And if you're doing debt, you can also do it through mergers and acquisitions, which is what I previously talked about, or you can do it through the bond market. Second career you can have, which is what I currently do, is a hedge fund. Now, a hedge fund is an investment pool. If you want to be a part of a hedge fund, you have to be a very high net worth individual, or you have to be a very high profile investor. Now, what hedge funds do is they collect money from the outside investors. They then throw that money into either the stock market or the bond market or whatever type of financial derivative you want. And then they're looking for the highest return of profit in the shortest amount of time. Now, private equity is a little bit different from a hedge fund. It is a capital investment, but private equity, you're looking for more long-term returns. So what private equity does is they also collect money from outside investors, but with that money, they buy a company that they believe is undervalued. They then improve that company's day-to-day operations. Once they appreciate that value, they will then go ahead and sell that company for a big profit. They'll take a big chunk of the fee, and then they'll also disperse those profits amongst the investors. Qualifications are pretty simple for each of the 3 careers. You're going to want a bachelor's degree in either financial economics, which is pretty obvious. And then you're also going to want to have, you can have an accounting major be on this side of finance, mostly because in these 3 careers, you're going to be dealing with the 3 financial statements, which I'm sure some of you have learned in your accounting 1 or 2 class, which is either the balance sheet, your income statement, and your statement of cash flows. You can also obtain an MBA. Now, an MBA will definitely help you out because it'll definitely make you stand out amongst recruiters because there's a very low acceptance rate to get into these careers. It's about 2 to 5%. Not only will that help you, but the MBA will they also recruit from top schools, as you can see in this picture. Most of them are Ivy League schools. However, if you get one from NYU or also Michigan Ross School of Business, this will also definitely help you stand out. And if you get an MBA, they will also start you off at a senior level, and they'll also start you off at a higher pay. Lifestyle requirements, it's not too pleasing. Your work-life balance is not great at all. Investment banking, if you're on the junior level, which I used to do, you're going to be doing about 60 to 100-hour work weeks. 100-hour work weeks are pretty rare, but they definitely will happen, especially if you're in the middle of a pretty large deal. Hedge funds and private equity, which is what I currently do, you're looking at about a little less, 60, 70-hour work weeks. But if you are at a bigger firm, such as myself, I have went up to about 80 to 90-hour work weeks, especially, like I said, if we're in the middle of a large deal. However, a lot of the new firms, big firms such as Citi, Goldman Sachs, JP Morgan, Morgan Stanley, they're introducing a lot of new regulations to decrease employee burnout and also decrease employee turnover. One of the first regulations is called Pencils Down Friday. Pencils Down Friday is basically just no work on Friday nights. You get to enjoy your night. Second one is no weekend work. This is to reduce bankers' anxiety and also reduce bankers' depression early on in their career. Now, salaries, you're gonna get compensated pretty heavily on the amount of hours you work. In investment banking, if you're in a junior level, you're looking at about 100,000 to 450,000. This is salary and bonus comp together. And if you're in a senior level, you're looking at about 500 grand to about 1.5 million. If you're at a hedge fund and you're at a junior level, you're looking at about 100,000 to 600,000, and senior level 500,000 to 3 million, and private equity junior level about 100K to 400K, and 350 to 2 million for a senior level. And if you see in this graph right here too as well, might be a little hard to see, the interns are getting ridiculous amounts of pay as well. If you're an intern at a big hedge fund, such as myself, you're gonna be looking at about 14 grand or 13 grand a month for an intern. That's almost 156 grand a year. Locations are pretty obvious. You have New York City because you have Wall Street. You have Chicago, you have San Francisco. San Francisco is more of a startup companies. I believe Miami will be on this list soon because they're now calling Miami the new Wall Street of the South. A lot of firms are actually leaving Chicago and going to Miami because Chicago has the very high taxes and crime rate, and Miami's got beautiful weather, and they also have much lower taxes than Chicago. So to summarize, we went over the differences, we went over the qualifications of each of the careers, we went over the lifestyle, the salaries, and the locations. Here are my references, and thank you.